So, welcome everyone. Thank you for joining. I appreciate your being here in time, well in time. And again, thank you. My quick introduction, my name is Yatin Vishnu Joshi. Most of you know me. And I did my MTech and then I have been a trader since 2001. Side by side, I also was working with IT companies like TCS and Cisco. So almost 22 years of experience in the IT industry and as of today 24 years as a trader.
हमेशा जीवन में यही हुआ है ना। कैटरीना ने कार मांगी ऑल्टो जेन फरारी फिर भी हाय हाइड्रोजन फिर भी
Everybody please be on mute. Make sure you are on mute. 22 years of experience in the IT and I have been a teacher with Art of Living Foundation. Currently I am doing my PhD in Yoga Vasishtha.
सबसे बन जाता है तो मेरा सब
Give me a second. So that's a quick introduction of myself and now we will proceed with the current presentation. So for the moment, I will switch to some other screen and I will show you something very interesting. Mm, Yeah. What is interesting here is this. I recently wrote a research paper. Okay. And that is something to do with the stock market, integrating yoga assisted concepts into behavioral finance, a theoretical framework for improved stock market decision making. Now, why am I referring to this when we are talking about some trade management? I wanted to highlight the reference sections. While writing a research paper, you have to uh, refer a lot of documents. And if you see all these research papers, I have listed 20 of them, which I actually referred and I had given reference in the research paper that I wrote. But if you see most of these documents or most of these references, they talk about, if I zoom in, they talk about the mental budgeting, self-control, financial literacy, then investor sentiment. They talk about the therapeutic potential of yoga philosophy. Okay. Then it is also do emotions influence investor behavior and so many things. Behavioral bias factors on investment decisions. Like if you go to any of these, most of them they are talking about a trader's guide, etc., etc. Performing your duty in the stock market. If you say this is the last one. Now, why I'm referring to this? Most of us we think that if um, we want to take some trade, we feel that it is the analysis, it is the information, it is the fundamental analysis, knowing the ratios, or technical analysis, knowing, I'll say, various indicators, bands, etc., etc., or candlesticks patterns, and in charts and all. So they play a big role. That is what our impression is in the success of the stock market. So all these research papers, nowhere they mention about any of these factors. They mention the most important factor in success in the stock market is related to your psychology and your discipline. Psychology is byproduct of your discipline because if you are disciplined, then automatically psychology will be taken care of. Why I'm saying that the psychology will be taken care of? Because we stick to the discipline, it is part of psychology. Simple. If I am breaking some signals or I'm breaking some rules, then it is telling me that I can be free and I'm not disciplined. And that means my mindset is not something which is in line with what I want to achieve. As a disciplined player, anywhere, it's not only in the stock market. In fact, what I usually say is if you are a disciplined player in the stock market, you are disciplined in the life as well. Because anywhere else, you are not probably punished so badly the way you are punished in the stock market. So this is a place where you get disciplined if you are really willing to be successful. Now, with this logic, what that discipline means is it is managing your trades. Whenever we decide to buy a stock, whenever we decide to sell a stock, we should know what we are doing and why we are doing that. Many people I know, they go by somebody's recommendations, or they go by some whim, some thought in the mind that, okay, probably this is going to work well. And then they try to take their trades. And that is why we see in the stock market, the most important statistics, 85% people fail. Or even some people say it is 90%, some say it is 95%, but minimum 85%. And why do they fail? They fail because by nature humans are indisciplined. Okay, if given a chance, we would want to be really, really free without any discipline. But as it is usually said, the discipline brings freedom. Okay, we are free today because our soldiers are in a disciplined way and they are guarding the borders. If they are not disciplined, then neither they nor us would be having any freedom. We will be invaded and we will have a lot of restrictions. So this part of discipline is something that we want to put in the stock market. And that is why my sincere request, you may become a super successor or super successful or super failure in the stock market. That purely will depend on the discipline. This is a famous statement you should know, that if your trades are successful, but if you are not disciplined, okay, understand this again. If your trades are successful, but you are not disciplined, then you remember that you are walking a path of disaster. Someday you will miserably fail because there is no discipline. On the other hand, you are having intermittent failures, sometimes success, sometimes failures, but you are very well disciplined, then you are going to be successful in the end. That is for sure. Now, how we are going to manage that discipline part of the trading in our life? That is what I am going to show you now. Typically, before going into this Excel sheet, I will mention what we do is we buy a stock. I'm talking about delivery, not really intraday or so, because we don't have for really time to maintain such sheet or so. So for delivery model, what we do is we buy a stock, and after buying the stock, we decide that okay, this stock will go up and have some target. And once that target is met, then typically we say, okay, maybe it will go further high and I will wait for it, or I will maybe once the stop loss is hit, not many people really configure stop losses, but if the stop loss is hit, then I may simply exit. Okay, so all such things people decide, but not everybody really follows that. Now that is what we are going to do. This session is, that is why I mentioned this session is not going to be great in terms of time frame. This is going to be a very short one. This is an Excel sheet that we are supposed to maintain. Standard, very simple, date, your order type like buy, sell, alert, whatever. And I'll talk about alert also. Maybe that is very important factor, the most important thing actually. The stock name, quantity. So you have got this stock name like DBL, CAC, Tanla, and NHPC, Jamna Auto, etc., etc. The quantity that you have bought and the price. Now this is something that you have to maintain. The day you take a trade, immediately you should update your this Excel sheet, such an Excel sheet, where you will be mentioning the stock name, the quantity, and average price. That is quite easily visible on your order page on whatever platform you are using, Zerodha, SHA, Direct, Grow, anything. Then the stop loss. Okay, I will also mention about few things here. Like this is reason for sorry. Reason for buy, sell, the stop loss and target. Okay, now why stop loss? So again, reason, target, and reason for alert. Okay, this is very important. Why it is important? So we'll start from this. I bought a stock. Now, why did I buy? Am I disciplined or not? If I'm disciplined, I should know why I'm buying. If I'm not buying, if I'm not knowing why I'm buying because probably based on somebody's recommendation or something, then it's a different thing. I don't mind. If you are following somebody, definitely follow. But then along with that, you should also ask for a target or something. So you can say, okay, Rico from XYZ. Okay, that is what your um, entry criteria is. Okay, stop loss price. Maybe this is 459 is the stop loss price. Reason for stop loss, I can say it is again Reco from XYZ. Target 570. Okay, Reco from XYZ. No problem. Okay, if you are doing that. But if you are a self investor, you are doing it on your own, then you should also mention, you should really mention what is the reason. Why this is important. When you buy a stock and you don't mention these details, later after 20 days, 15 days, 30 days, whatever time, you look at this date and you don't know why you had bought this. Typically, people trade with the charts of daily or weekly or monthly criteria. Okay, if like they are technical analysts, they will do it. So on 3rd October, what was the situation? Whether it was bond based on some formation on daily chart or weekly chart or monthly chart or hourly chart or whatever, we don't recollect. Why did I buy that? And for one stock, you may remember, but if there are 20, 30 stocks in your portfolio, you will not remember. So this is very important. Why? Because you can actually go and check that this was the reason I had bought, and now maybe I'm happy or I want to sell or I'm unhappy, it is not performing well, everything. As soon as you get that picture of that day, current chart will tell you that this is how you are doing. You probably want to continue or exit or whatever. Okay, so you can say, okay, I bought because the stock has gone above 100 moving average. Okay, 100 daily moving average. Okay. Fine. My stop loss is what? If I'm deciding that it is gone above 100 daily moving average, then I'll say if this is an estimated price 459, then it is like the stock is going below or it has gone below 100 daily moving average. Fine. Then target, I'll say, okay, it is probably certain percentage that I'm looking for. If you know support resistance, you can say, or resistance, whatever it is, right? You decide what is your criteria for buying, what is your criteria for selling, what is your like for booking the profit or losses that you have to mention. Why again I'm saying this? Because for stop loss, if you identified the price and this is the reason you are putting, you know that in the first place, you know that there is a genuine reason, there is a genuine stop loss that you are defining. It is not random. This is what all this the discipline part brings in. So once that is done, once you have identified the stop loss, you know what is the reason for the stop loss. When the stop loss is actually hit, then you can go and check, oh yeah, this was the reason. I had identified this reason and now it is actually done. Sometimes we might make a mistake in this price, or sometimes we give a reason, but the price may not be accurate. The price may be somewhere here, like few points up or down. Then you can go and check. Oh, this reason it says it is there, the stop loss is hit at this price, but the reason is still not there, like there is still some scope. Instead of 458 it can be 455. Okay, similarly for the target, if you are seeing that the stock is going up and then you see there is really a good pattern, I may not want to exit, I can hold, then you can modify these things. Now, these are two things, stop loss and target, that must be mentioned. If you are trading blindly in either direction, like in the direction of the stop loss or in the direction of the target, then please don't do that. Okay, without such information, just imagine for one stock we are collecting so many things, and there are few more things that I will be mentioning. If without such information, if you proceed, then there are a lot of stocks you will not know what is doing what and where it is standing. So this is one thing. I'll talk about alert now. What is alert? Alert is that you are here, you are mentioning some price. Okay, it is greater than 458, less than 560 or whatever. Now, when you are analyzing the stocks, like this is something that we do in our as a part of our stock market training. I have been training in the stock market for last like 8 years or so, and this is one most important observation that we had. That every day we analyze few stocks, and then we say, okay, these stocks we can buy tomorrow, or we feel that currently as a part of analysis we don't see an opportunity to buy a certain stock, but in future this stock can be bought at certain price. Okay, if you understand support resistance, we'll say, okay, if the stock reaches this support level, which is say 560, or if it goes a little below 560, then maybe we can buy this. Or if there is a resistance at 458, or there is some other criteria like some indicator is there or whatever, and if the stock goes beyond this price, then also we can buy. So this reason we mention here, why this alert at this price. Okay, and when actually this price is hit, the stock goes above 458, or in this case for Tanla it is, if goes below 560, then we go and check. Oh, this reason it was mentioning that the stock is breaking the resistance, stock is going below 100 moving average, right? Whatever, or 200 moving average, 300, whatever, or 50 moving average, that you decide. If that is the case, we say, oh, it is going down. Now it is coming toward the support, or I should be buying it or not. This criteria again helps. See, purely a number will not give any direction. This reason is important there. And trust me, this is an additional tip from today. Apart from any other analysis, if you really follow the alert part, you have configured alerts properly, they give you the best returns, because you can actually see in the future that if the stock comes to this price, I will buy. And accordingly, if you make your decisions, most of the times our history says alerts have given us the maximum returns in minimum time. So this is something that you have to maintain. Now, additionally, every day check what is the current market price, what are the returns. Okay, like this is if you have bought at certain, this is saying here 501, that is the price, current market price is 452, the returns are minus 9 point this thing. Here it was 166, current price is 174, the returns are 4%, right? Also important is holding days. How many days have you been holding? Like if certain stocks they are giving you 4% returns, and this is 400 days, then you don't want 4% returns in 400 days. You would really want them to be in quick days, right? Like within a month or maybe two, worst case. So if that is what you see, based on the holding days, the returns are not really great, you may want to exit the position also. So this is something that the metrics that gives you. Additionally, SL percent, the stop loss percent. That stop loss percent is, my stop loss is something, I'll say 458. Current price is 452. So how far is my stop loss from current price? It is above. The stop loss is hit 1 point this thing. Here, the price is 174. Current market price is 174. Stop loss is 160. So now my stop loss is 8% away from today. Like if the price goes below 160 from today, it would have been down by 8%. I don't want to lose for 8%. Out of 8%, I can say, okay, fine, make it 4%. So instead of 160, if I go to 166, let us check how much this becomes. This becomes 4.59. Okay. So I'll say, fine, this 4.59% is okay as a stop loss. So what happens when your stock has gone up, like it is already at 174, and now it has started coming down? When it comes to 166, at least you would save your 4% or 3%. Getting me? So this is called trailing stop loss. The stock has started going up and up. You don't really want the stock to be there, the stop loss to be there where it was earlier. You would want it to actually, uh, you want to book the profits at higher prices. Now, all this, as a matter of discipline, you will maintain. Once you do that, and once you observe your trades, there are quite a few benefits. One benefit is you know what is happening with your stocks. Many a times we simply don't get time to observe what is happening. We don't know why we bought. We don't know what is the stop loss. We don't know why that stop loss is defined. All this data will be gone. You will actually be monitoring your stock, and then your decision will be more effective. What we have done in addition to just providing this thing, okay, this is a template, and then now if you see there are various color codes. So these are the color codes that they tell that alert is triggered, stock has retraced from alert, stop loss hit and bounced again, target hit, and stock has come down. Okay. Now I'll explain these color codes, but before that, why I'm showing you this? We have a software, okay, which monitors your data. So this is an Excel sheet that will be created for you, and only you will have access because it is on Google Drive. So it is shared with certain people. Like here, it is shared with Ishan Joshi. It is shared with these Google programs. Okay, these are not human beings. This account that you are seeing, these are Google programs. So that is something that will belong to you only and I, because my program is running here, and I'll be creating that. After that, once this Excel sheet is created in your name, in individual's name, you will be putting this data: date, order types, stock name, quantity, average price, reason for buy, sell, stop loss, these columns up to J. If you are not buying today, you want to create some alert, you will be creating these alerts. The software, what it will do is it will monitor for you. It will every day, it will fetch the current market price, insert it here. It will calculate the returns based on your buy price. It will also calculate the holding days and update here. It will also calculate the stop loss percent and update. If you want to enter in specific comments, you can of course enter into this row. So all this data, current market price like MNOP, this will be updated by the software. The software does one more thing. If you have configured this alert 516, if the alert is triggered, it will highlight this row in yellow. Okay, that is the color code. So if the stop loss is hit, it will highlight this in red. Okay, if the stop loss is hit and the has started going up again, it will then change the color. So this is like all these color codes that they are going to do. So I'll talk about the color codes. But most important part is the software is going to tell you, instead of you watching individually that okay, my price is 501 and now what is the current price, go and check into chart or in the NSE site or anywhere. This will do it for you. The software does it. It will monitor and it will update the colors. So as soon as you see yellow color, you say, oh wow, my alert is triggered. Now let me go and check my charts or my PE ratio or whatever. Right, all that information you can do, and then you can make a decision based on that. So stop loss is hit, it will monitor, it will inform you. If your target is hit, like target for this thing price is 199. If your stock has got current market price as 199, the software will mark it in green. That yes, these are the stocks for which the target is also hit. So a lot of monitoring and update is done by the software. And as of today, a lot of people are using it. They are getting benefited. We ourselves use. because it gives an immense benefit. I don't have to go through each and every stock. I just monitor which are yellow, which are red, which are green, and then maybe I make my decisions. So before now we go into further things, I'll quickly look at the color codes. So this is alert is triggered. My stock has gone below the configured price or it has gone above the configured price. That is monitored through alert. The stock has retraced from alert. This is pink color or close to purple. Now, what does it mean? It means that I had configured an alert, which is, I will say, if it is less than 560. Okay. So stock has gone below 560. It has gone to 551. So current market price is maybe 551. Okay. But again, tomorrow it comes up. So it has hit 551 and now it has gone to 565. So this is called retracing. The stock was going down and down and down. It went below 560, it went up to 551, and again it has started going up. It has gone above 560. So that is like it has retraced from alert. Now, what is the significance of this? So you will have to learn alerts for that. But quickly, if we are configuring certain alert and if it fails for whatever reason, okay. Or as I mentioned that if you are looking at 560 as your support, the stock has come to the support, it went a little below support and it has started going up. Your alert may be at stop loss. You may want to see this as a stop loss price. The stock has gone below the stop loss and again has started going up. All these possibilities. Okay. So they really are meaningful in terms of alert monitoring. The alert is retraced. Stop loss is hit. Again, the same situation. Your stop loss was 560. It was hit. Stock has gone to 551. So this will make it red. But again went up. We are not like unknown to these situations in the market. We configure certain stop losses. The stock goes to that level and starts going up. So sometimes we do exit the stock after the stop loss is hit, and then we forget it. For example, if I say TCS, if my stop loss is 2,500, the stock came to 2004, 2004 Okay, so 1 rupee below 2,500, the stop loss is hit, and I exited the position, and the stock has again started going up next day. So this is what is going to tell you that yes, your stop loss was hit yesterday, but now it is this color, orange color, that it is again recovering. So you can enter again, right? We don't want to really miss. We are very disciplined. We configured a stop loss, but after exiting, if the stock is again recovering, we would want to continue with the trend. So that is this situation. Similarly, target. Okay, you hit the target, you booked your profit, and then start. It has started coming down. So all these situations, okay, it will monitor, it will update according to these color codes, and this is the software that we are using. So there is like this is on based on cloud. Every 1 hour at 9:30 is it starts 9:30, 10:30 it goes up to 3:30, 4:30, and then after that it doesn't run for the rest of the day. So during the day or end of the day, you can watch what is happening with your stocks and accordingly make your decisions. So this software, as of today, it is available free of cost till end of December. And if you are interested, you can just tell me. What you have to just give me is your Google Mail ID, and based on that, then we will decide like how you want to configure your portfolio. You want to update it here, and accordingly, immediately you can start monitoring. So this is what we have been offering, and this is the part of discipline. Now here I will stop and I'll go to the questions if you have. So far you were on mute. I will unmute you and then you can unmute yourself and ask these questions. Any doubts, any questions?
No
No
questions
doubts.
as of now, but it's a very nice thing that we have to discipline ourselves in terms of stock market. I am bit premature into this. I just started trading on, but this is a good habit that I can follow.
Definitely. It is monitoring that is most important. Our monitoring the stocks, what we are doing. Most of the times, I mean, I have been into IT industry for a long time, and what I have observed, we are expert in many things, but we don't do documentation properly. Okay, and if we don't document it properly, then later we ourselves land in trouble.
Correct.
So this is the part of documentation. All right. If there are no questions, then I'll be really expressing my gratitude to you for joining this and giving this opportunity to share the knowledge with you. Let me know your interest about this. You try it out for some time, no problem. And we also have our stock market training classes in technical analysis. You may tell others if you are interested, you can inquire more. Okay. And all the best for this.
Thank you.
We'll stop here if there are no questions. Thank you so much.
Thank you.